Well, hi all, it's Steve Podmore here. It's Saturday morning, it's 17th of July, and it's a lovely morning here in Canary Wharf. Well, I'm up and about early. I'm going to go out on my bike and do a bit of exercise, but at the same time, I'll be doing some work when I'm out and about. But I wanted to reflect just briefly before I tell you what's coming this weekend and this week. So it's almost 5 months I'll have been on Clubhouse, in about a week, and it's been just such a remarkable experience being able to meet people from all walks of life and all over the world who are working to do good and do well and tackle some of the most important issues the world faces. Now, we know that there's urgency. We know that we're just not going fast enough. The Sustainable Development Goals, the goal was 2030, and the reality is all of those goals are just not going to be even scratched on the surface. So what do we need to do to scale up and speed up? Well, I believe we need new forms of finance, new platforms, and new mechanisms of having visions that are bigger and better and bolder for the world. Now, that doesn't always mean big initiatives. It just means we've got to think big at how we tackle these truly important issues. We've got to work systemically. We've got to work collaboratively. Mostly, I believe we have to move finance from where it is right now to where it can have much greater effect on people and planet all over the world. And that is the goal of Transform Global and our vision for a new World Bank, but better. Now, many of you might have heard me talking about this on Clubhouse or elsewhere, but what if you want to really understand the detail? Well, on Monday at 4 o'clock UK time, we're going to do the second in a series of Zoom calls, and we'll do it on Thursday and the following Monday. So it's 4 p.m. UK time on Monday, this Monday, the 19th of July, and it's going to be amazing. So the goal is really to give people what the vision is, to explain the different components. So as some of you know, there's a media and technology component. There's what we call the bank, the new World Bank, but better, like an investment bank, a commercial investment bank, a multilateral development bank, or a development or a merchant bank. We call it a sustainable innovation and development bank as the better descriptor. And the goal for that entity is really to create fund structures that we can either manage ourselves or help others manage or raise and manage very innovative fund structures that are better able to get capital, especially to what would be called the capacity building or capital formation part of the equation. We know there's a matching challenge. We know that there's legions of impact entrepreneurs and infrastructure projects that need capital, and they need it quickly, and they need help and support. And on the other side, you've got masses of capital that's in the system that's either trapped, that's going into speculative finance, or it's going into big business, but it isn't getting to those places that could deliver the greatest impact, the most jobs, the most innovation, and also generate healthy returns for investors. Now, why isn't that happening? Why is that match not working? Well, I've got some theories. Partly it's to do with capital concentration, the sort of push for the line of least resistance. Money follows that line wherever it can. And the bankers and lawyers and all the service providers, they make more money, frankly, with supposed less risk by investing in major corporations and the financial instruments that surround them, or all of the financial markets in the world. But the reality is, it's the real economy that we need to be funding. It's the innovation on every level and the development and the rollout that needs capital, and it needs help and support. So although that capital concentration is occurring, ultimately what it's doing is creating a vacuum. And that vacuum is where no jobs are, or where not enough jobs are, and we're never going to tackle things like climate change if we do not get capital into that what would roughly be called capacity building or capital formation layer. But essentially, it can be done through innovative portfolio structures, innovative fund structures, and working alongside an ecosystem, including other matching platforms. So the vision for Transform Global includes actually a holistic approach to do that. It is designed to be a bank with a media platform called fundingtheglobalgoals.tv. It's designed, and that's designed to be a multi-format media platform, ultimately that could operate all over the world, that is news and financial education and blogs and podcasts and information in all sorts to help people understand, and especially understand the innovative mechanisms and how to create new fund structures and platforms, and how those entrepreneurs that are needing capital can get it more effectively, how we can tie in with academia and incubators and actually create intelligent partnerships, including those incubators and funds, and do so sometimes in complete structures, in one organization that can catalyze and work with many others. So the media platform fundingtheglobalgoals.tv is part of the plan. There's another media and technology and matching platform which is called Big Crowd, and as the name suggests, it's really about getting the crowd, the masses, involved in a due diligence and donor funding program to help pay for prizes and awards that game-changing projects can actually be awarded or win. Powerful prizes and awards, everyone worth £3.6 million sterling. And the focus of those awards is to get those, what we call big impact game changers, above what people like Peter Diamandis calls the line of super credibility. And these are not all startups. They can be bold scale-ups. They can be policy ideas. They can be initiatives of all kinds. But as I've seen, many of them have exactly the same problem. They struggle to get organized capital and organized help and support in the right way that they need. And that's not to actually do what they need to do. It's so that they can find the real money in partnerships and clients perhaps, and talent that they really need to have maximum impact. So Big Crowd helps tackle that. And the crowd, the individual subscribers, free or paying subscribers, they have lots of benefits, including it's the gamification of doing good and doing well, and they can actually earn on the platform. So those two media and tech components that Transform Global will own completely and fund through its equity that it raises, they're really exciting, and you might dismiss them looking at them in a cursory glance. But that's why it's so important to get a little bit of an understanding of the detail of how these things plug in, because they provide deal flow, they provide due diligence, they provide a spotlight, they provide marketing, and all of that helps support the bank itself. And Transform Global, the bank that will own those entities, it's designed to create very significant funds. So the fund that we've designed, it would be a 9 billion sterling listed vehicle. It's not designed to list on day one, but within 2 to 4 years or so of launch. And 9 billion is a huge amount of money, for sure. However, this is designed to be a multi-asset strategy. It's designed to invest in on-market impact investment, really in the stuff that's very catalytic. It's designed to support other fund structures and platforms that are very complementary. And it's designed to do something incredible, which is invest in something called the butterfly basket portfolio structure. And very simply, this is really where you take a lot of risk early stage with volumes of projects that get capital and organized help and support. And that is with a program that includes incubation and acceleration, delivered through centers that we will set up around the world, but also through partnerships. And that discovery capital enables multiple follow-on rounds to be made into a smaller number of larger projects, but everyone starts at the beginning. Very simply, what that means is you can make money for the fund, again, fair level returns for the fund at the mid and late stage of that butterfly basket portfolio structure, termed butterfly basket because it's shaped a little bit like a butterfly or an old-fashioned bow tie. And it's actually a basket of investments, essentially a portfolio. But the difference is the smaller size is a million sterling. So when we're doing a volume of early stage, that's a million sterling, half of cash and half of help and support. And it's designed to progress to much larger rounds of 4 million and 12 and 30 and 60 and 120. And as the name of the fund suggests, £360 million for one round. And that means the fund is called the SDG 360 Game Changer Fund. And very simply, that those volumes of early stage that you're providing the very best chances for them to work. You're stacking the innovation. You're seeing how complementary they are. It's like putting seed and angel with venture capital and with private equity. And doing so in that way, it really can change everything, because it means that important game-changing profit with purpose projects and ventures all over the world can get as much capital as they need on fair terms with that help and support. It means the fund structure doesn't just tolerate failure, it embraces it at those early stages. Of course, we don't want all projects to fail, but we do want to do things that are bold and innovative. And the design really of the fund, and the fund will be managed by the bank and its subsidiary, SDG 360 Fund Management, but that means that the bank is there to support all of those portfolio organizations, and also all the technology and the process and the marketing and the fundraising and the corporate finance activity that's required to run this kind of organization. So in essence, what that means for that fund structure is and this can be replicated all over the world, although this initial one would essentially be a global fund with regional operations and partnerships, as I've mentioned. This structure can be replicated on a slightly smaller level in different jurisdictions. And essentially, it can just change so many things, because it can generate impacts. The failures can fail for the right reasons, and the teams who are behind them and involved, if they show that they have real capability, they can be treated amazingly rather than just discarded. They can actually go and work for other portfolio organizations, or their revised or new ideas can potentially be funded as well. So it's really a proving ground and an ecosystem. And it's an ecosystem because by providing that help and support that can be including accounting and legal and talent and strategy and social media and video production and meetings and events and sales and marketing and access at so many levels, by doing all those things, what this means is those entities have got the very best chance that they have to succeed. Now, as I said earlier, on that butterfly basket structure, less ventures get more capital through multiple stages. So what happens to the ones that don't get funded through this fund structure? Well, the bank potentially can help them raise more appropriate capital from elsewhere. They may fail, or they might not need multiple rounds. They might only need the first million or 4 million with the help and support that comes with it. So this structure is designed to be something that's quite unique. It's called a portfolio. And if you ask me, a portfolio isn't 3 or 4 or 5 deals a year, which is what a typical venture fund might do, or private equity fund. A portfolio's got risk management, and it's got diversity, and it's got themes and sub-themes, and that's really what this is about. So if you think of the fund that I've just described, so that butterfly basket, that direct investing, sits alongside the complementary other fund investing, the market-based investing, and that fund is also designed to make an investment back into Transform Global. And that means that structure really can change everything, because it means the investors who are investing in the fund and the bank are separate things. The bank, what we loosely call the bank, is Transform Global, and what we call the fund is that 9 billion fund. The question is, how are we going to raise it? And that's what I'm going to explain on the call on Monday. What the plan is to incentivize all of the ecosystem to help support that fundraise, where we're working with some of the top banks, or we will be working with some of the top banks who want to change the world and who want to earn fairly and well, but who really want to move the needle on this capacity building activity. It's the most important thing there is. And what's great about our model is the media platforms, both Funding the Global Goals.tv and Big Crowd, they can help the entities that come onto the Big Crowd platform, the entities that get funded by the Transform Global, the bank, and the activity, the portfolio activity of the SDG 360 Game Changer Fund. Now, underpinning it all is designed to be a foundation. And that foundation the Transform Global Trust Foundation, when it's formally set up, it's designed to have an increasingly strong share of the vote as it reaches its maturity and its capability to provide long-term governance for this model going forward. It's designed to make money for investors. In fact, it could be very profitable for investors of all kinds, but ultimately it's also designed to create impacts, some very significant impacts around the Sustainable Development Goals, or their successor if there is one. But what about incentivization of the people? Well, the whole point about this model is it's not just about the money, it's not just about the financial return. In fact, we think the financial returns can be an enablement of the social environmental impacts that we want to make, but they're not a replacement. So the whole point is the incentivization program is what we call restricted impact options. So people both who are involved with managing and supporting the fund and also managing Transform Global or its subsidiaries, they'll all be actually incentivized by these restricted impact options, which means it's both a top line and underlying financial performance alongside the impacts that are set down, that are targeted, measured, and achieved. And therefore the rewards, the financial rewards that for potentially many thousands of people over time, they can be quite significant. But they're significant in the context of the impacts that are generated. So we believe, I believe, and many people who are starting to support this model and will be involved with it, that this is a model that can really move the needle. At its core, it's a vehicle. It's a vehicle to get many people who, and to be honest, I've met some of the most incredible people over the last 15 years of my journey. And what I've seen is many times those entities are either working with the kind of banks that we have here at Canary Wharf or in New York or Johannesburg or Switzerland or wherever it might be, or Silicon Valley, but they're not feeling they're having the impacts that they want to generate. Or they could be working with the World Bank or the IFC or the BRICS Bank or the European Investment Bank. And they're having meaningful impact, but not on the level that they want. They don't have the freedom because they're restricted often by a mandate. So those in pure profit with purpose, or profit at any cost type finance, even if it might have supposed good ESG and is doing socially responsible investment or impact investment, so even if they might have that or claim it, very often they're just missing the most important funding gaps. They're just not focused on them. Or they're restricted by a geographical mandate. So what Transform Global is designed to be is an intelligent intermediary. It's designed to work across all investor classes and ultimately all over the world. Now, of course, there are places that we can't go into for reasons that are pretty obvious. We have to operate and will operate within, of course, the international regulations around things like not operating with sanctioned countries, although we know that it's important very often to help people all over the world. So where we can't, as the bank, support these initiatives, our model is also to support intelligent NGOs and projects and ventures indirectly through our media channels or the entities that we might support. So it is truly a global vision, although of course we have to be very strict in where we operate with the bank and where we don't. And we really want to make sure that the governance and compliance is really in place. But all that said, this becomes a vehicle where the best and the brightest can work amongst the best and the brightest and the most motivated and those who are ambitious for real impact, but with intelligent governance that is there right from the start. Not a culture of fear, but a culture of impact and a culture of dynamism, which we have to have. So let's go back to explaining this weekend. So it's now Saturday, and so tomorrow morning, in my Clubhouse room, we'll talk about, of course, the vision for a new World Bank, but better. And in the Clubhouse room, it will be quite a broad discussion, as it is often. We'll talk about both forms of finance and forms of policy and new fund structures, but also we'll talk about the entrepreneurs on the ground and what they and those who are seeking to do good and do well, what they are struggling with, what the issues they're facing. So it's a broad room. It's about the issues, but also we talk a little bit about Transform Global. That's at 8 o'clock tomorrow morning, the 17th. The 18th of July. Now, and it should be fun, as it has been many, many times. And thank you all for coming in, and I encourage more people to join the room, to stay and listen and participate. If you're out on your Sunday walk or wherever you are in the world, it might be evening for you or early morning. Anyway, later that day, so later Sunday, 8 o'clock, I'm going to do the second discussion on the key man. Now this is a fascinating book that Will Lauch and Simon Clark have recently published. I think it went live on the, or published in the UK on the 8th of July. And this is a book about Arif Naqvi and Abraj Capital. And it's a very interesting, very crazy tale about someone who basically never really had the morals to do what he was ambitious to do. That was kind of clear from an early stage. He created a few private equity style successes when he was living and working in Dubai. He's originally from Pakistan. He studied and worked in the United Kingdom here for a few years before being in Dubai. And those private equity successes that really that are explained in the book, that gave him a reputation. And a number of people suggested he should set up a private equity fund. Over time, that was turned into what's called Abraj Capital, or was. And essentially, they raised over 14 billion pounds or dollars for different funds. But basically, this was also at a time that was pre and post September the 11th. Things were getting really crazy in parts of the world. Markets were changing dramatically, and some of the investments weren't performing anywhere like they should have been, and that's an understatement. However, they didn't want to tell investors that, or Abraj or Arif Naqvi didn't. So the reality is they lied continually and realized that they couldn't, or he realized that he needed to use money from other investors who'd invested in certain funds to pay off their expenses and other funds. But it was a culture of hubris and of excess, and where ultimately something like 700 million dollars went missing from investor money. And it was actually Bill Gates and his team who uncovered and really initiated an investigation that brought this house of cards down. And now what's amazing about the Abraj story is Arif Naqvi spoke in some ways, in ways that were actually incredible, about the need for impact and the fact that the West and capitalism has failed the South, and the East, and or the North and the West have failed the South and the East, and that we need a new form of capitalism, and we can do good and do well, and we need market-based activity to help tackle things like poverty and many of the other issues. Now, I believe that in some cases we need public finance, and we need social finance, and we need philanthropy, and we need aid. But also, we have to recognize that these things, are not an unlimited pot. They have failed in many respects to tackle the issues that we've just talked about, and Arif did actually call this out. But what Arif didn't get right is you cannot eat the fruit without watering the root, which is my mantra. And that basically means you can't just do private equity style deals to actually build up this market-based activity. It can play a role for sure, but unless we figure out how to fund infrastructure and early stage and mid-stage investment on all of the levels, and help countries build up their banking and financial and governance capability, and do it in partnership And rather than do investment in emerging and growth markets, as well as in the United Kingdom, where we also need it, and Southern Europe and the United States, and so many places that need it throughout the world, unless you do it in ways that are fair and intelligent in partnership, we're never going to address these issues. So what Arif and his teams did, because those teams bought in, they were paid off essentially. They enjoyed the trappings of wealth and were very happy to go along with the plan. How many really knew? How many really enabled him? His banks and his lawyers and his accountants? How many really enabled him? It's hard to say, but quite a few. But still, we have to do some of what Arif Naqvi was saying, but we've got to do it in better ways with good governance, great governance, governance that's actually much more clear and transparent than what happens in private equity funds or venture funds. Can you imagine this? If you're a venture fund investor, meaning if you're a pensioner and your pension fund is putting money into the venture fund as what's called a limited partner, there's virtually no transparency that a pension fund will have on the underlying investments, and they certainly won't pass that information through. You as a pensioner, as a stakeholder, will never be told, or in virtually no cases. So we've got to get really good at making sure that our investing community, the people in this part of the world that you can see, hopefully you can see somewhere here, these banks, we've got Societe Generale there and Credit Suisse and others. We've got to be really great at making sure they do what they're supposed to do. They steward society's capital in ways that's fair and intelligent, and is not funding the bad stuff, is not funding dirty coal or munitions, if we don't want that to be the case. And many don't want that to be the case anymore. So we have to make sure that not only do they not fund the bad stuff, they fund the good stuff. And guess what? You've got to water the root to eat the fruit. So that means all of these funds that say we don't do early stage investment, or the banks that say that's the case, or go somewhere else, and I've had this for many years, it's, oh, go and talk to venture capitalists, and they don't do it well, and they don't do it all over the world. So unless we do these things, we're never going to address society's ills. We're never going to create the jobs that are required to take away the desperation people feel, the hopelessness people feel. The only way to give hope is to get capital to where it can deliver great impact with great governance. You know, governments have got to function. They need a tax base. If we don't have that, we can't provide public services. So in order for our economies to work, they've got to have the diversity that nature has when nature works. The nutrients, the water supply, the plankton of our economic food chains are what we have to fund. And if we ignore these things, we are in trouble. So, a recap. Sorry this is a long video, but you know, it gives a little insight into what it is that we're seeking to do. We've got to recruit an awful lot of talent. We've got a lot of people lined up and a lot of people in the ecosystem, but ultimately the rubber hits the road when this is funded initially. So we've got a plan to raise about 2.35 million at the moment. That's what the focus is. That will help us unlock some grant and some donor money, and that will help us unlock another 40 million sterling. And that first 50 million or so is enough to get this moving. Now the plan is for Transform Global to raise over £4 billion up to and including its IPO, and for the fund to raise 14 billion up to and including its IPO. So that would be a collective of about 18 billion pounds over the first 2 to 4 years, possibly 2 to 3 years, because these things can be done quickly in relative terms. They can't be done overnight, but they can be done relatively quickly because of the state the world is in right now. The key is getting it the right traction and the right momentum and the right movement initially, and putting in place the right partnerships. Because this can't be done on our own. It has to be done with an ecosystem approach. So of that 18 billion or so, ultimately the goal is to create value well in excess of about 75 billion for investors of different types over 6, 7, 8 year period. And if we do that, around about 8 billion or so of that will be for all of the teams, but linked to those restricted impact options. So it means everyone gets to do well, investors get to do well, the teams and the employees right down to the junior level get to do well, but most importantly, we get to tackle the most important issues in the world. So this weekend, we'll be 8 o'clock in the morning, we'll be talking this on Clubhouse. 8 in the evening, I'll be talking about Arif Naqvi and dissecting the book, The Key Man, with a general conversation on Clubhouse. And I welcome you to come in and join that discussion. And then Monday at 4 o'clock, we'll be doing the Zoom call. Now, if you want to be on the Zoom call, where it's going to be a 2.5 hour call, I'll present what I talked about a little, so people can understand more detail. And you can dig in and you can ask questions and give your feedback and grill me to the extent that you wish, and others that can be involved. So I welcome you onto the call on Monday, if this is something that you want to know about, and if you think you might want to be involved with, or you could introduce others who can be. That could be investors or stakeholders of any kind. And the goal here is transparency, so we want it to be inclusive. This is not just hearing from people at a high level in finance or policy or technology. It's about hearing from people who have the need as well. So that's what we're doing, and the program of those Zoom calls will continue. So if you want to be on the mailing list for them, be sure to DM me on Instagram or Twitter, or with your email address, or contact me on LinkedIn or any of the other formats, and let me know. If you want to be on the Zoom call on Monday, in my Instagram or my Twitter profile, it'll take you, there's a link at the top, it's a link in bio or a link tree, and the top link there, I believe it is, or the second link, it will take you to the invite page on LinkedIn, where you can suggest or request that you'd like to come to that event. Now, one last thing, I'd like to ask you to do something. If this sounds exciting to you, I'd love you to tweet this out, or post it on LinkedIn, post it on Instagram, share, tell people that you think you would like to have involved or might like to be involved, because this can't be done by me on my own. Now, this has been a long time coming, and I can share some of the detail in my journey, not all of it, unless I'll do that one day. But the whole point is, this is a vision that I believe its time has come. But it's not just a vision for me, it's something for the world. And I encourage people all over the world to get involved, participate on whatever level makes sense. That could be just tweet this out, tell other people, come on the Zoom call, share it on LinkedIn, get in touch, give me feedback. So thank you very, very much for watching. This is not a short video, but hopefully it's one that makes a little sense and gives people hope, because that's what it's designed to do. It's say with the right governance and the right vision, we can achieve incredible things in the world. We've got to incentivize people the right way. We've got to incentivize the investors. We've got to help them manage risk and help them deploy the capital into the entities that ultimately can collectively have greatest impact. And that includes some not just toleration or tolerating, but embracing the learning and the experience and the discovery. It's not failure, it's learning that these portfolios can have, or big crowd can have. So I look forward to these discussions, and this year's an important year. We've got the COP coming up in Glasgow in the United Kingdom, and The goal basically is to have at least the first couple of million, and then ideally really the first 50 million up to or before the COP, so that we can go into those negotiations saying the world is taking this seriously, and look at not just this initiative but all the others that we can shine a spotlight on. So and if you know Mark Carney, or if you know Boris Johnson, or if you know government heads that would like to know this, send this video to them, because guess what? This is a vision that could create millions of jobs all over the world, and it could help make governments and investors relevant again. That's what we need. So thanks again for watching, and I'll speak to you soon.